You know, we've heard it time and time again that there are three basic areas that you need to master in order to become a consistently profitable trader. Now, first of all, you've got the strategy. Now, you may think this is the hardest to master. In fact, it's not. In fact, it's one of the easiest to master. There are plenty of decent strategies out there that you can follow. You can spend some time and develop your own, backtesting and so forth. Then you've got the risk management, which again is basically just a set of money management rules that you can simply learn and indeed follow. Then you've got the all-important psychology, which is by far the most important and difficult to master. It's often said that you can give the same strategy to two different traders, one will be profitable and one will not be profitable. It's all down to psychology. So today we're going to look at the four most common psychological emotions that we experience as traders and how best to deal with them. The first emotional state that most find when they come into trading is that of fear. The fear of losing money. Now, we all know that in the conventional working world, we have to go to a place of work, give hours of our time to someone else, to some other organisation. In many cases, doing something that we'd rather not be doing. And in return, we get paid money. Now, losing this hard-earned money at the click of a mouse, the money that we had to spend our precious time making, is not a nice feeling. Most fear losing money, so they find it really hard to pull the trigger in the first place. It's a common feeling, so don't think you're alone in this. So how do you combat the initial feeling of fear when trading? Well, it's quite simple. Start off small. In fact, so small that you're not going to be overly concerned about losing it. Now, we've all heard the disclaimers in the past. Only risk money that you can afford to lose. Don't confuse this with apathy, where you're happy to throw away your money like it's throwing it into a wishing well or into one of those push penny machines at the arcade. It's got to mean something to you, or else you'll just end up bleeding away small accounts as you go. But the trade should not be too big either that you're fearful of taking the trade, even if it fits your strategy. So the first thing I would say is to drop the trade size. Basically, reduce the leverage. Now, still on the subject of fear, but in a slightly different context, I want to talk about the fear that you may experience when you see profits in a trade, but then those profits start to erode away. Now, we all know that money is an emotional commodity. Now, when we call the market right and we see profits, it feels good, right? It's nice to be feeling right, nice to get the market right. Now, as human beings, we like that feeling. It feels assuring that we've got something right. But often when you see a profitable trade, the ebbs and flows of the market will see some of those profits erode away. So all of a sudden, this nice feeling of being right is challenged. So the common emotional mistake is to take profits way too soon, before our profit targets were hit. Now, this may indeed be the right decision on the single trade. However, is this emotion that's causing you to take snap profits the moment they start to reverse that will result in you messing with your risk-reward profile? You'll end up by seeing only smaller profits on the profitable trades, but bigger losses on the losing trades when, of course, they do occur. Now, this fear of giving back is also related to the practice of moving stops to break even. Two schools of thought on that. Now, as far as I can see, when you move a stop to break even too quickly, you're not giving your trade a chance to play out. What will happen is that when you review your trades at the end of the month, you'll see many break-even trades. You'll see some big losing trades and not such big profitable trades. So how do you combat all this? Well, what I say is do the analysis, set your profit targets, set your stop loss levels, and leave it alone. Set and forget. You're going to be far less emotional if you're not watching every gyration of the market. It's very true. I could give a perfectly good strategy to two independent traders with a great win-loss ratio, great expectancy. Now, one trader will be consistently profitable with that strategy, whereas on the other hand, another trader could be completely unprofitable with that strategy. And it's the trader that messes with the trade that will fall into the latter category. So set and forget, let the trade do its thing. Now, still on fear, but with a slightly different setting. Often traders find themselves in the situation where they fear a profitable trade turning into a losing trade. We all know what it's like. We're in profit. We're human beings. We like to be right on what we do. And when we're right in the Forex market or any trading, we're rewarded by seeing profits grow in the account. But it's not a nice feeling when these profits start to erode, just using the usual ebbs and flows of the market. Markets are going like that all the time. When we see our profits being eroded away, it's not a good feeling. So the common emotional state that many traders fall into under the fear banner is the fear of giving back our profits. So what do? The moment we see a bit of profit being eroded away, we snap and take that profit. We lock in a profit. Basically, this is messing with our risk-reward ratio. Of course, on occasions, it might have been the right thing to do. You might have locked in the profit just before it turned and would have ended up a losing trade. So you feel you got the market right. But in the long run, over the biggest series of trades, doing this is going to really mess with your risk-reward profile. What's going to happen is you're going to end up taking smaller profits on your winning trades, but still having the bigger losses on your losing trades. And this eventually will lead to an erosion of the account. So what I suggest you do, and really take this quite seriously, is use the set and forget mentality. Basically, set the trade, set your profit target, set your stop loss level, and walk away. It really is as simple as that. Stop messing with the trades. It's quite often you'll find that you can give a perfectly sound strategy to two individual traders. One is going to be consistently profitable with the strategy, and one is going to be consistently not profitable with that strategy. And why? Chances are the one that's not profitable, he's going to be messing with the trade when it's in play. So the best thing to do in this situation to avoid the fear factor in giving away some of the profits you see on the table is to set and forget. Now, the second emotion I want to talk about is greed. This is basically twofold. We'll get to it in a sec. It's pretty common for those that start off in trading to be greedy. As human beings, we want things right now. We want them to be big. Someone called it the microwave mentality. They can't wait. And in trading, it's often the case as well with rookie traders. They want to see profits today, and they need to be big so they can go out and buy those nice things that they crave for. And this will undoubtedly cause excessive use of leverage. I spoke about this actually in my recent video on leverage reduction. Check it out if you haven't already done so. So this greed mentality is very dangerous in trading. It will often cause overtrading in terms of quantity and also size, or even both. So you've got to kick it out. How do we kick out this emotion of greed? Well, quite simply, get back to earth. Get realistic expectations. If you think you are going to give up your day job on a $1,000 or $2,000 trading account, you are delusional. Can you make a trading career with a small account? Yes, of course you can, but it's going to take time. If you're greedy and you want it right now, you will, chances are, blow up your trading accounts. Now, you may indeed refund the account only in time to do the same again until you finally give up on the dream. So realistic expectations and goals of 2 to 5% a month is a solid, worthy target. Build it up over time without being greedy. Prove yourself as a trader, and then the dollars will follow. Now, on the greed subject, many traders fail because they stay in trades too long in the hope that this trade will be the banker, this one will pay all their bills, and this is going to be the one that is going to set them up in their business. They try to knock the ball out of the park, and they don't bank profits along the way. Getting realistic is the way to combat this. Look, 10 to 1 risk-reward ratios, they're great when they come in, but far too often they don't. Shooting for the stars will result in multiple losses before you get those winners. So you've got to be emotionally very sound to accept these losses. And remember, it is the emotions that kill traders. Now, of course, we are all very different, so I don't want to be too judgmental here, but I've not met many traders in my 30 years that can stomach 10 or 20 losers before the winner comes in. So be realistic. Be happy with what the market is going to give you. Now, a solid strategy that has, say, a 50% win-loss ratio can still be a very profitable strategy if you take more than a 1-to-1 risk-reward ratio, like 1.5 to 1 or 2 to 1 or 3 to 1. Much better when you're starting off to trade with a smaller risk-reward ratio so that you're banking profits along the way. That way, your emotions aren't going to be too affected. So don't be greedy. Take what the market is prepared to give you. Don't shoot for the stars, and be accepting of a decent risk-reward ratio. 1 to 2 to 1 is fine. Haste. Now, this is one of the biggest emotional traps that many rookie traders fall into. It's the feeling that you always need to be in a trade to get your fix. You take your trade before the rules of your strategy have even kicked in. Trading, after all, is exciting for some, and it's a feeling of not being in a trade. It's basically like a drug addict on withdrawal. It doesn't feel good. So the trader that acts in haste enters the trade just because of the feeling the excitement is good are the traders that ultimately are going to end up failing. You have to stop doing that right now if you're falling into that category, if you're suffering from that emotion. How to do that? Well, I would say have a checklist. Have a checklist with all the rules of the strategy. Make sure they're ticked off before you enter the trade. If you're still trading without clicking your checklist, it's time to stop and get a grip of this emotion, because it's a deadly emotion that could end up crippling your trading. And lastly, the final emotion that we need to master is learning to switch off. Get away from the screens and do something else. A healthy work-life balance is so important. 12 hours a day at the screens with the emotional highs and the lows is not good for your health physically or indeed mentally. So what I like to do is get over and enjoy some time out with the family on the beach. Trading is all about getting the correct work-life balance. You need to be able to switch off, to get away from the trading screens. And there's no better place than where I am this week, and that's on one of the western islands of the Philippines. Philippines is made up of 7,200 islands. Most of them are uninhabited. This one is habited, but it's very, very remote. And for me, it's perfect because there's no distraction. I'm not forced back onto the screen, so it enables me to completely switch off from the news, from the price charts. That's why I love coming here with my family on an annual vacation. So, as always, if you liked my video, give me a thumbs up. If you didn't, give me a thumbs down. Don't forget to leave a comment below. Let me know what you think of the western islands of the Philippines. If you don't already subscribe to the channel, make sure you do. And don't forget to hit the little icon, the notification icon. In that way, you're going to get notified the moment my next video is released. Don't forget to subscribe to the Instagram channel if you haven't already done so. Until my next video, signing out from the Philippine Islands. Goodbye.